retail traders trying to hit it big, buying that perfect call option that was going to go to the moon and make them lots of money. And the stark reality is that most people just don't hit it.
More investors are turning to options than ever before, but instead of hitting it big, they end up bleeding money.
Just understand, you are playing in a game with some sharks that actually want you to lose money.
Nate Tucci with Trading Pub shares 3 myths about options.
That's an insanely massive move just to break even on your call option. Frankly, I just think that's dead wrong.
Could these common option strategies be costing you money? Nate, so great to have you back on the show talking about really the hot topic right now, and that's options. More people than ever before are trading and working in options right now. Why are we seeing so many people going this route?
Well, I think because the stock market is wonderful and it's going up and people want to take advantage of it. And options sound like this great way to trade stocks, but just make a whole bunch more money. And in some ways, that's true. Options are a more aggressive way to trade stocks. I love trading options. I just don't love trading regular options. And I think the vast majority of people, they want to make more money, and I'm all for that. They typically go about it the wrong way. And that's not just me saying that. I think the statistics are pretty clear here that the vast majority of people trading options are losing money. And I think it just boils down to misconceptions. You know, people hear like kind of headlines or very like shallow understanding of what options are or how they work. And they say, okay, I'm all in. I had a funny experience recently where I was at the dentist getting my teeth cleaned, and this very sweet, 25-year-old girl was saying like, "Oh yeah, I opened a Robinhood account. I'm trading options now." And I kind of had that like, "Oh, I wonder if you're kind of going down the right road or the very wrong road as you go through this."
Now, this is such a great point. So many people are maybe just experimenting with this, or maybe you've even been in this for years, and there are some things that you could be doing that could be costing you money right now. Nate is in the market every day. He is trading options every day. He does multiple shows per day with some really great trades that you can make. We're going to put up a QR code really quick here just so you can see some of Nate's work. It's a totally free tool that you can access right now to get some ideas on the best options trades to make. But we are going to talk about those misconceptions here now, Nate. Let's get into that first misconception that could be costing a lot of people who are new to options or maybe who've been doing options a long time a lot of money.
Yeah, well, I think the first thing, and I guess like the more general one, is to understand options are a zero-sum game, and the market makers, people who we call market makers, that means they make the market for the options. They sell the options, they price them. They actually don't want you to make money, right? Because when they sell you an option, if it goes to zero, they keep the money that they sold you that option for. So if you think about like these massive institutions like Citadel, Ken Griffin became one of the richest men in the world over the last 5 years. Well, how did he make so much money? Well, on the back end of Robinhood, he sold millions and millions and millions of options to retail traders trying to hit it big, buying that perfect call option that was going to go to the moon and make them lots of money. And the stark reality is that most people just don't hit it, right? Because options are actually very, very difficult. Now, I would define that a little bit more clearly and say regular options are really, really difficult. That means just buying a call or buying a put, which is what the vast majority of people do. And not to get too conspiracy theory on you, Bridget, but there's a reason that most brokers give you level 1 permissions where you can only trade regular calls and regular puts, and they kind of make you jump through a lot of hoops if you want to do anything differently. A little bit of a coincidence that their backers make lots of money on people who can only trade level 1 options, and those are the permissions that they're going to easily give you and let you go wild. But as soon as you want to do something a little more advanced that doesn't make it so easy for them to make money, now you have to jump through some extra hoops, do some extra things. And so just to throw a little conspiracy theory on it, I think that's where most people start and kind of end up going wrong.
Yeah, they take the easiest way to start getting into options, thinking, well, it's the easiest way to do it. It's the way most people do it. This is the way I'm going to make money. But you're saying that's the misconception. The easiest way to do it is likely not the best way.
Yeah, and just understand, you are playing in a game with some sharks that actually want you to lose money. And, we won't dive super deep in that. Like you said, that's what my show is for. I'll give you all the analysis, all that sort of thing. But I think just generally understand options are wonderful. I love them. But if you're jumping in just saying, yeah, let me buy a call, let me buy a put, start with a recognition that someone on the other end of that trade, who's probably worth billions and billions of dollars, wants you to actually lose that trade. So it's kind of just, let's set the stage and understand the real game that we're playing here.
Oh, that's so great. Understand the real game. Okay, the next point that you have, the next misconception is really interesting, and that's how to know if you actually win or lose. Let's talk about that.
Most people think, hey, I buy a call option on Tesla goes up 1%, I'm making lots of money. Well, Not so fast. Actually, one of the hardest things to understand about call options is what we would call the implied volatility. What that really means is just how much does the stock actually have to move for you to start making money. Most people never understand this. I mean, I have people, Bridget, have been trading options for 10 years. And until we actually go through it, didn't even realize kind of the bar that they were trading against, where the market actually has to do a lot more than you think for you to actually start making money. And it's exactly what we talked about before, right? If you want to make money as an option buyer, well, you have to overcome this disadvantage of what the option they're selling you. And so think about it. If you're selling me an option, do you want to make it really easy for me to make money? Or do you want to price it in such a way where, hey, I'm going to make money under most circumstances? Well, obviously, it's the latter, right? We call this the break-even price. The break-even price is where the stock has to go for you to make money. So just to give you a very simple example, if you buy a call option on Apple, you buy a $250 call option. That $250 is what we call the strike price. That's the actual option contract you're buying. What most people think is, okay, if Apple goes to 250, I make money because I bought a 250 call option. It went from 245 to 250. Neato, gang, we're making money. Well, in reality, there's actually this thing called the break-even price. And that prices in the extra volatility they're selling you. That's a fancy way of saying they're making it harder on you because they want to make a bigger gap where you lose money. And that break-even price is sometimes much higher than you realize. Now, sometimes it could be just a couple dollars higher. There's not a lot of extra volatility. But sometimes it can be a massive disadvantage. I recently had someone ask if they should buy a Hood option. Robinhood, monster stock, ripping really high right now. And the option was like $125 strike price, something in that range. And the break-even price was like $135. So you don't just have to be right on the option. You don't just have to get it to go in the right direction at the right time. You have to overcome an extra 10% move in the stock. Bridget, that's an insanely massive move just to break even on your call option, let alone actually make money.
This is so complex. And I think that goes back to your first point that there's somebody who wants you to lose. They want to make money off of you and not the other way around. And I think if you're a traditional investor, we have a lot of traditional retail investors who maybe haven't explored options or maybe are just starting to look at that. It's a different concept, right? Because most companies, they want their stock price to go up. They want you to make more money. This is a different concept for sure.
It is all around. And like you said, it is complex. Like, I wouldn't recommend someone who wants to trade options start studying implied volatility by any stretch. But just understand what the game is, like I said, and then start understanding, okay, I'm not just going to go in blind thinking I'm going to buy a call option as long as the stock goes up, I'm going to make money. Take the approach that I know what the stock has to do in order for me to make money, and set your expectations accordingly. And I'm just going to be incredibly honest with you. I don't think I could be a good trader just buying calls and puts and try to time the market. I love the stock market. I've been doing this for a while. I feel pretty confident about, what I believe about different stocks, but I don't think I can make money that way. It's just too hard. The market makers are piling the odds against you on every single trade that you make.
It's a really good point. Before we get on to your third myth to talk about, I just want to talk about when you are getting into options, how much of your portfolio, how much of what you have to invest should you be doing this way? How much do you do traditional investment, and what kind of amount of your resources should go into options?
That's a great question. So there's lots of different rules of thumb that people will throw out there, risk 1% of your account per trade or 2% per trader or something like that. I do it a little bit differently. I actually separate it by account. So I have an investment account that has the vast majority of my resources in it. I'm doing some options in there, but they're not like, quick short-term options. They're long-term. They're premium-based, which means collecting income. And then I have most of my stock holdings in there. And then I actually have a separate, much smaller active trading account where I am more aggressive. And the reason for that is because I don't want to have $1 million sitting there and then I'm using $10,000 per trade. Then I'm wasting, $990,000 of buying power. I don't think that makes any sense. I'd rather have all that buying power used in the market and then have a smaller account that I'm much more aggressive with, that I actually am using that buying power. So for me, that's the easiest because it does a couple things. It lets me use, my funds as aggressively as I can while not actually risking it all. And then frankly, it's helpful for discipline. If you have all of your resources in one account and a trade is going wrong, I'm human. Everyone else who trades is. Sometimes you make some really bad decisions when the moment hits. Now, thankfully, I can say that's probably the thing that I've gotten the best at in the last few years of trading, being more mechanical, not worrying about one trade or one scenario, and just what I call swinging the bat. Know your strategy, swing the bat. Don't worry about the outcome. As long as you have an edge, it'll stack up over time. But it still is nice to just kind of take that out of the equation. No, this is my trading capital. this is my investment capital, and keeping those separate. That's how I do it. Lots of people have different rules of thumbs, but my trading capital is a fraction of my investing capital.
I think that is such helpful information for viewers out there. Thank you for sharing that, Nate. Let's get on to this third myth. I think we've talked about understand the game, know when you're winning and when you're losing, and then let's talk about strategy a little bit. What myths are out there about strategies?
This one is actually kind of scary because they have done a really good job of kind of soaking this myth into mainstream financial media, which is that anything other than regular options is super advanced and it's really risky. And frankly, I just think that's dead wrong. As a matter of fact, I can say without a shadow of a doubt that if you learn to trade what I would call level 2 options, so that's like a debit spread or a credit spread, maybe even that sounds complicated, but after you go through a little bit of training, it's really not. But you can trade it with way less risk than regular calls and puts, which people are often very shocked to learn. So for example, you can buy a Tesla call and spend $5,000 on it, or you could trade the same type of trade with a debit spread and buy it for $80. So do you want to risk $5,000 on a trade, or do you want to risk $80? And most people just don't know that that kind of trading is even available to them because the mainstream media has done such a good job of saying, oh, those spreads, that's where things get crazy and complex and risky. And the truth is, sure, it is an extra level of complexity. You have to learn a little bit more. But actually, I would recommend every beginner, everyone, especially with a small account, should actually learn that first. You can trade with much less size, much less risk on the table. You can control your risk in a lot better ways. And most importantly, you don't have to trade in a way where every trade, the odds are massively stacked against you as soon as you hit the button. That's the only way to do it. I wish I could tell you, hey, just do these regular options this other way, and you won't be at this disadvantage. Unfortunately, I can't tell you that. I have to tell you, take the time, learn how to trade with a little bit more complexity. Yes, it's true. It'll take you an hour to learn, how different trade structures work, but I think it'll pay you dividends for the rest of your life.
Yeah, a really interesting way to look at it. What the media might be telling you is the more risky play you're saying is far less risky than the typical way people might get into options. I know you mentioned with that first myth that they make it easy to do regular options, but it's a little bit harder to learn this other way to do it. How do you access this level 2 options that you're talking about?
Yeah, great question. And again, this is the part that I guess most people just never hear about because it's not out there in the mainstream. But most brokers will call this level 2 or level 3 options. It's a permission-based thing. So you actually have to get your account approved to trade level 2 or level 3 options. Now, again, I won't go all the way down the conspiracy path, but I think there's reasons they easily let you trade regular options, but have to make you jump through some hoops for those level 2 and 3 options. But it's just, you go to your broker. Most of them do it online these days. Hey, I want to open up an account. I want to get approved for level 2 or level 3 options. And then they ask you questions. Do you understand these options? How active do you trade? What's your risk tolerance? And as long as you are telling them, hey, my risk tolerance is high. I'm willing to lose when I'm wrong. I'm willing to make money when I'm right. I'm going through the training to understand these. Most of them will approve you without much hassle. But it is just funny to me that they will almost tell you like, hey, this is a much higher level of risk to get to level 2, where I would say every time I trade a level 1 option, I am risking way more money than when I'm trading a level 2 options. So it's just a little bit ironic in that way. But yes, the brokers are kind of, set up to make it a little bit trickier to get you into that level 2, level 3 option.
This is so interesting and such great information, again, for people who are new to options or maybe have been doing this for a long time, but maybe feel like they are not sure what they're doing. So great information, Nate. I think the next step here is, now that you know some of these misconceptions that are out there, it's really getting the information you need to make the right play.
Everyone that I hear will say, okay, so you're a stock trader, you never traded options. Start with level 1 options and then go from there. And I just think that's crazy advice. Like, why would you start with the riskiest options? They're going to be more expensive, especially to trade the stocks you probably want to trade, like Tesla and Nvidia and Google and Meta. You're going to risk thousands and thousands of dollars to take one trade. I would say the exact opposite, Bridget. I would say if you want to trade options, do the hard work first, learn how they actually work, learn how to trade spreads. I say hard work, but we're talking a couple hours of your time invested to actually open Pandora's box and really understand what you're doing, how the market works, and in my opinion, open up the only way that you get a real edge in options. We teach this every day on our show, 10 a.m. and 3:30 p.m., how these trades work. We live trade. I trade real money so people can see my brokerage account, see how it works. And then I actually even build a tool. It's called the Income Machine. It doesn't just do the work. It actually populates the best trades with the best spreads in real time. You could click a button. It'll spit out the exact trade for you for exactly all the reasons we're talking about, because people spend years and decades and never actually learn how to find a good trade. And I thought, let me build a tool that does it for you. So that's another thing that people can do. They can show up at a free show, or they can even try that tool for free if they want. It's really simple. It's a couple clicks of a button. It pops up my favorite 3 trades of the day based on my criteria, and then spits out the exact option criteria for how to take advantage of those in a way that, in my opinion, the odds are stacked in your favor instead of against you. And I just think if all you do, and hopefully just listening to me, will maybe get you from one side of the line where you're always trading with the odds stacked against you to the other side of the line where you're trading with the odds in your favor, I would consider that a massive success for people listening to me.
This is why we wanted to have you on the show again, Nate. So much great information for our viewers today. And again, he's offering a totally free chance to check out the tools that he has. There, you can scan the QR code now or click the link in the description of this video to access that free tool that Nate's talking about. Also, we have the QR code here if you want to join his show live, again, twice a day, every day, with a lot more information on how to make the best trades in options right now. Again, Nate, thank you so much for your time and for sharing some really great information with our viewers today.
Yeah, absolutely. Thanks for having me on, and hope to see you guys in the live trade room.
Let me know your thoughts in the comments. Are you an options trader? Is some of this new information to you? Have you ever done these level 2 options that Nate talked about? I'd love to hear your thoughts in the comments. Thanks for joining us, everyone. As always, happy investing.